続きまして、お待たせいたしました。パネルセッションに移りたいと思います。Now let's move on to the next session, Building on XRPL, Global Developers and the Next Wave of Blockchain Innovation. ご登壇者の皆様をご紹介申し上げます。リップル X、J.I.O. アキンイェル様、アノドスラボ、パノス、メカ
All right, the first part of this is in Japanese because this is from XRP Tokyo, but I wanted to try to listen into this dude, head of engineering, Ripple X, co-founders of Ananos Labs, which is a DeFi protocol in XRPL, co-founder of XRP Cafe, Xamin Wallet, and the APAC head of Tenity. No idea what that is, but we'll start off with this to get the ball rolling and let some people flood in before we get started on today's call. If you go ahead, Aqua.
I was just gonna say, what's good, bro? How you living?
Man. It's good day, bro. Good day, great week, honestly, God. While we're playing and rolling through this, if you hear anything that you want to talk about, just throw up your sign, and then we'll pause it.
Yeah, no doubt, bro.
XRPX. Please give a walk.
Never sue the other driver after a car accident.
Bear, back New York Mellon, Visa, Australian Trade Commission, and Novartis, and of course, our friends from Ripple. We called it the realignment agenda. What came out of the room wasn't what most people expect from a technology conversation. Nobody was talking about hype. What kept coming up was plumbing. Blockchain as an actual settlement infrastructure, not the flashy stuff. The serious capital is moving into the things that actually run the business. And the sharpest line of the night came from one of the most experienced people in the room. They're no longer hiring for domain expertise. I think we spoke about that at the breakout room earlier. They want tech fluency. That's what the market we're all operating for now, which is why this panel is the right conversation at the right time. We're not here to debate the potential of blockchain. We're here to talk about what the institutions and builders actually need and what's being built to meet that. First, at Tenity, this isn't abstract. 3 years in, our partnership with Ripple has evolved the way the market has. From banking concepts to banking projects with live transactions, further enhancing and contributing to the 3.3 billion transactions that Christina mentioned earlier, we're building together towards that. And that's exactly what brings us to this stage today. That's a long introduction, isn't it? Let me introduce you to the handsome 4 people who are doing exactly that. Io is head of engineering at Ripple, the team responsible for how XRPL evolves as a platform for institutional adoption. Panos flew in from Greece with 2 hours of sleep, is building Anodos, focusing on consumer on-chain finance, removing the technical barriers required for mass adoption. Sebastian has been at the center of the XRP community through XRP Cafe, shaping how the ecosystem grows and who attracts it. And Robert is COO of Shaman, the great Robert, as I've heard. One of the most widely used wallets in XRPL, which puts him closer to the real end user behavior. So we have protocol, community, and products. Let's get into it. Io. Ripple has been making a deliberate shift in how it positions XRPL, less as a payments network, more as a platform for institutional finance, namely tokenized assets, on-chain credit markets, compliance infrastructure. From where you sit, what's driving the shift? And for a financial institution or a builder evaluating where to place their bet, what's the actual case for XRPL over the alternatives?
Great question. So one of the lessons that we've learned working with institutions is that they don't adopt new technology for the sake of adopting it, right? They adopt technology that fits what they're already operating with or operating as. And for us, payments was never the full story for the XRPL. And as we've deepened our relationship with financial institutions, we've learned that the real opportunity is actually more towards the ability for us to enable this notion of a full life cycle of capital. And moving money was just a small part of that, right? When you think about what a full life cycle of capital looks like, it's issuance, it's trading, it's collateral, it's credit. And all of those things are coming together on the XRP ledger. It's coming on chain. And when I think about our ambition and what's changing is the fact that we now have tokenization on XRPL, stablecoins, compliance. And this year, hopefully we'll have credit on chain as well. And that's with the lending protocol. And so all of these features, together kind of work in a way that unlocks new possibilities, right? And one of the things I think about is the fact that these features are native to the protocol. You don't have to be a smart contract expert. You don't have to understand the deep aspects of blockchain architectures. It's simple APIs. It makes it easy for institutions to just build their products natively using these features. And that's because they work together and they unlock the ability to build products that are purpose built for infrastructure around financial use cases. That's the real case for XRPL, in that if you're an institution, you don't want to be an expert in blockchains. You want to do less work off chain to enable your products from a financial perspective. Then XRPL is the go-to.
Thanks for sharing the capability from an institutional perspective. That's what the unlock of the value of XRPL is. But over to Panos, just to shift gears a little bit. Much of the discussion around the XRP ledger, as I've mentioned, focuses on institutional finance. You're focused on consumers. Anonymous is building the first neobank on XRPL. Very excited about that. From your perspective, what is the current gap in the market that traditional neobanks are failing to fill? And how does XRPL allow you to offer a superior service to the general public? Would any of the features that Ayo mentioned be applicable to that?
Yeah, I mean, great question. So, listen, I mean, infrastructure is great and much needed. Institutional finance is important. But if there isn't a gateway for the masses to easily use and benefit from this technology, I think we're missing the point. So I think it's fair to say that banking, consumer trust in banking has declined significantly. And both banks and neobanks share a fundamental flaw, which is they're still relying on this old banking infrastructure. And they can basically, they control your money. So they can freeze your accounts, they can charge you more money, and basically they decide when and how you can use your own money. So I think there is a massive demand for a better banking experience. And by focusing on removing unnecessary middlemen, by focusing on real, let's say, transaction speed and services that weren't possible before, thanks to blockchain technology, such as the XRP ledger, which also offer speed, transparency, and low cost. And consumers want and deserve better banking options and better options generally in their life. And this global accessibility combined with privacy and control is basically what we're offering at Anodos.
Thanks, Panos. Novi, you went to the two cogs of the wheel of the ecosystem. Moving over to Sebastian, community, ecosystem community, terms being loosely used in this space. But XRP is genuinely different over the past over decade. It's organic, it's global, and it's been around long enough to have survived multiple cycles. Christina's presentation earlier mentioned celebrating 100 participants at the time. That was really a lot. Now that'll be quite commonplace. But it's been around for that long. From where you sit at XRP Cafe, what does the community actually look like right now? And more importantly, how does it influence what gets built and who shows up to build it?
Yeah, so the community right now is stronger than it has ever been. As active as it has ever been. It's an organic community, it's a very strong community. And that's part of the reason why we have always been huge fans of the ecosystem and why we build here. We know that the people that use the XRP ledger, they tend to stick around. So we love the technology, we love the community. We have always been focused on that aspect because usually people, when they think of XRP, they also think of Ripple and they think of institutions, but the retail aspect is also very, very important because at the end of the day, we're all part of retail. So we're all in that bubble. And what we do is we're right now focused on NFTs, but we're also soon gonna do meme coins. And usually both of those don't get the best reputation, but they in fact bring culture to the ecosystem, which is basically young people want to be part of it, and these are young talented people that they might be very talented developers that build the next big product. I was just looking, for example, someone built a gaming studio with AI agents and 40 AI agents, and then each of these agents has a role. One is in charge of design, one is in charge of marketing. So imagine how powerful these new technologies are in the proper hands. They can completely disrupt these traditional companies that are very slow to move. So just one person can have like a big difference. So that's where we try to focus. We try to target anyone because anyone can make a big difference.
These earbuds let you hear exactly what people say about you in other languages. And
I wasn't going to go off script, but I'm going to go off script a little bit. Do you see, we're talking about institutional adoption right now. Do you see an intersection of the younger generation latching into the institutional people and vice versa as well?
I think so. And young people might have new perspectives on how to approach the institutional side of things that might end up disrupting many of these same institutions. So if you're a big company that moves slowly, I think you really need to pay attention and start seeing how you can also leverage AI in your workflows.
And I think the community can help bridge the gap between both worlds.
Definitely.
Robert, Shaman is interesting because it sits at the edge of two very different audiences. Developers who need tools and users who just want things to work. Walk us through what you've built and what you've learned about what people want when they interact with XRPL, not what we assume they want.
Yeah, thank you. So what we've built is the biggest wallet, biggest self-custodial XRP wallet. We have over 1 million users who manage billions of XRP in self-custody. And I really want to echo what was said here is that the audience and the community for XRP and XRP Ledger is one of one. It's very unique. We notice from our users that they're not looking to sell their capital. They're looking at XRP as an investment. They want to have it in self-custody. They care most about security. They want to go to sleep with peace, knowing that in the morning when they wake up, their XRP is there. It's safe. It's secure. The average XRP holder is definitely more wealthy than you would see in other ecosystems. And we at Saman are in the crossroads of everything, as we like to say that we're the signing layer for the XRP ledger, in a sense that most transactions, most payloads get signed with our wallet by our users. So if you're an active XRP holder, let's say on an exchange, but you want to use the XRP ledger to its full extent, using its AMM or using its DEX functionality, then most of those users at one point convert into a Saman user, because we are a feature complete wallet that lets you do exactly that. We let you harness the full power of the XRP ledger while also providing a lot of developer resources, just end user resources, tutorials. Our app is translated into tens of different languages. So wherever you are, our main goal is to make XRP and the XRP ledger accessible to you.
Accessibility and trust, which is the perfect segue for IO. Look at that. Worked out perfectly. This is one thing you've been building for institutions. One of the clearest signals from my Singapore roundtable, as I mentioned earlier, is institutional leaders are choosing partners they can audit over partners who are faster, but opaque. One quotable quote for you guys to post on LinkedIn: control is beating performance right now at an institutional level. Ripple has been investing heavily in making XRPL more verifiable and secure at the protocol level, including bringing AI into that process. How does that change the conversation with institutions? And what does it mean for the trust calculus when a bank or an asset manager is deciding whether to build an XRPL?
Really great question. So there's like 3 parts to that question. I'll take one part at a time. And so the first thing is that we deal with institutions that want systems that they can understand, that they can audit, that they can rely on. And what that looks like is what we've been trying to do in XRPL. And they prefer XRPL over systems that are, they might be faster, but hard to understand and opaque, right? And for us, from where we stand, I think trust and reliability are central to our strategy for XRPL, and we've been investing heavily in those particular areas to make sure that institutions have confidence when they build on XRP Ledger. And so our inputs are to enable trust at the protocol layer. And again, what that translates into is auditability, deterministic behavior, stronger guarantees that when you build on XRPL, you can rely on the properties that it provides, right? And that's kind of our North Star, right? Because it's a financial operating system. And because XRP Ledger is sort of tailor-made for financial use cases, we're doubling down on AI as a instrument to fortify the defensive aspect of the ledger, right? To expose vulnerabilities, to expose edge cases where features may interact, and improve the inputs, meaning I'm going to use a technical word here, but invariants. These are things that need to be true as you execute transactions on the ledger, and introducing more consistency when it comes to safety across the code base. Right, we're dealing with 10 plus years of legacy code base that has proven reliable over that period of time. And so we're investing at the protocol layer to make sure that when institutions choose to build on XRPL, they're confident in what they're getting, but also can articulate what they're getting to internal stakeholders and external stakeholders, think auditors and regulators. And so together, we're trying to build something that will last, for decades to come. And just to go back to what we've been, investing in when it comes to AI, we've stood up a dedicated red team that is assisted by AI to just, look at the code base, look at the features, and just try to expose as many, bugs as we can, to just, again, fortify the foundation and to address the cracks in that foundation so that it's mature enough for institutional use. And so that's where I'll stop.
Thanks, Ayo. Very pragmatic use of AI. It's used for controls and monitoring, strengthening trust with your institutional partners. With that being said, Panas, you're building the next financial institution under XRPL. As you scale Anodos to support a global user base, what are the primary challenges in maintaining a seamless user experience and making blockchain visible? I think Ayo alluded to that earlier. Like, you don't need to be a technical expert. You just have to know it works.
I think, yeah, the biggest problem we have as an industry in general, I would say that we're trying so hard to push for crypto and any blockchain element down the throat of users when they should simply be invisible. And let's be honest, I mean, most people don't care about blockchain or crypto because crypto also has this stigma now in the general population where they see crypto as gambling, or they think of memes, scams. It's just the general idea. I mean, that's the truth. But people care about, for example, sending money to a friend or a relative in the other corner of the world in seconds at no cost. But they don't care if, for example, that uses stablecoins in the background or any other technology. But these should stay in the background. I mean, the user shouldn't see, for example, wallets, gas fees, multiple stablecoins, like having to navigate all these, which create friction for the end user. So our idea is how we can maintain balance and decide, what to hide from the user and what to keep like from them to see in the front end. And in the end, another thing is that, I think the crypto jargon and the terms we use as an industry, like connect your wallet, which doesn't really mean anything to the average person, where it simply is sign up or sign in. I mean, we have overcomplicated things so much as an industry when inventing all these new terms when we shouldn't. So yeah, I think the idea here, the key thing is how we can maintain and keep things simple for the user without overcomplicating things.
Welcome to the new generation of web creation, where words can launch a...
Just get it to work. And again, I'm going to go off script. In your positioning of your neobank on XRPL, do you plan on leveraging on this Web3 terminologies, or you just say it's faster, it's cheaper?
I mean, our idea is to basically the user to have no idea they're using crypto or blockchain or XRPL. I mean, they just want a card. They want banking services. So they want to send money. They want to earn yield on their savings. Now with DeFi and tokenized treasuries, you can get the 4% US Treasury yield, which banks basically earn from you as a depositor. So right now you can cut out the bank and go directly to that source and get that 4% yield. So in our case, we want to, with one tap, the users just go and do what they want to do without ever knowing that they're using crypto or stablecoins or any blockchain.
But I think it's worthwhile mentioning it's on XRPL.
Yeah.
After all, you're on an XRP farm.
Yeah.
Moving over to Sebastian, the next wave of builders on XRPL probably aren't coming from crypto native backgrounds, a bit contrary to what you mentioned earlier. They're coming from traditional finance, which I alluded to earlier, from enterprise software even, from markets like Southeast Asia and Japan. I think, again, going to reference to Christina's presentation earlier, a lot of projects coming from Japan that are moving fast but have their own dynamics. What actually works to bring those builders in, and what's the honest gap between where the ecosystem is today and where it needs to be to reach them?
I think that once people are able to experience the technology, then they'll get more interested in it. So the question is, how do we find ways to get more people to try it in different ways? So whether it is through community efforts, through art, through...
All right, this shit's over. I only had one key takeaway from this, and I'll play it back in a second. But I wanted to first, what is wrong with your audio? Is there anything wrong with my audio, Aqua? Does it sound weird?
Nah, everything sounds good on my end. I've been able to hear everything perfectly.
On Jane XXX, just try to make sure maybe that your volume is turned up, my friend. I don't see anything wrong on my end. Hopefully it starts working for you. All right, real fast. I just wanted to come over to Aqua's X profile to let him share, his own perspective on this piece here. And I don't know, Aqua, if you kind of want to hit a talk track on what this even is, as you were explaining it to me this morning. Before I played the video clip to everybody so they can hear it. But this went viral, 88,000 impressions, 44 comments, almost 300 likes, 43 reposts. So I'd assume that it's something of importance for the XRP community to listen to, as it's coming directly from David Schwartz, if I'm not mistaken.
Yeah, it absolutely is. He was in an X space, and I wasn't in that space. I'm only hearing this clip, but the clip of what he was saying, honest to God, just was like, holy smokes. I didn't think anybody from the Ripple team would even speak like this on XRP, because here's the thing, when you come into crypto, especially when you come in, through the XRP channel, you become very passionate about XRP, and you start hearing all of the, potential theories of how XRP will play out, price action, the government using it, so on and so on, a bunch of speculation that seems to be believed across the board through all of the XRP army. And to hear David Schwartz speak on these topics and give his, his position and what his thoughts are on these topics, I was like, yo, this is a rude awakening, I feel like, for a lot of people, because a lot of people are invested with, just wishful thinking, hopeful thinking, and don't really have facts. And to hear him clear that stuff up, I was like, yo, this is exactly what I wanted to hear. Like, this is amazing that he even said this. So, yeah.
All right, so let's give it a listen. And then, if you want to hit a talk track on it, you're more than welcome. Where's the...
You need to listen to this.
It's very, there are a lot of NDAs around agreements, but like, it's not like those agreements are earth shattering. It's just when Ripple, signs an agreement with somebody, they generally disclosure agreement, because their business is their business. There's no, 99% is what you see is what you get. And if you think that there's something because you heard a rumor about it, you heard something from unofficial sources, it's almost always it's either going to be false, or it's just a very short period of time from when it becomes public. Some things have become public just a short period of time, but there's no major secrets that have been going on for years, or as far as I know anyway. Now, just to be clear, I have a pretty good idea of what's going on at Ripple. If things are going on at other places, I have a pretty good idea of what's going on at the XRPL Foundation. I have a pretty good idea of what's going on some places, but like, there's a lot of places where there could be stuff going on that I know nothing about. But as far as I know, there's no conspiracy, there's no secret plan, there's no, the government's about to do some big thing having to do with XRP. There's nothing like that I know of anyway. And so if your involvement or investment is based on the belief that there's some big secret going on that's gonna, I think you probably are foolish.
So I had to cut off the last word because there was some.
Whoa.
Yeah,
wow.
Bro. Yeah. Yeah. And when I heard that, I was like, I'm gonna be real. When I first came into crypto and I was holding XRP, I believed a lot of the theories, I was like, oh, that's, hell yeah, let me buy more XRP. This thing's going to $1,000. The government's going to use it. And for him to speak on that and say what he just said, we got to be realistic with our investments. And we can't put all of our eggs in one basket, in my opinion. Not financial advice, of course, but, going all in on a speculation, I don't know.
The crazy part about this clip directly from David Schwartz is that because people's belief systems are so enshrined and just manipulated by social media, even though that this dude is the core developer and core engineer of the XRP ledger, right? You would think that he knows more than the average person on the internet. It's like people will still be like, nah, there is a conspiracy. You know,
Mhm.
there is.
Some of the comments are actually saying that, bro. They're like, oh,
You're
he's
wrong,
lying.
David.
You're
Yeah.
wrong, David. He's lying. He can't say anything. He's under an NDA. Well, then why even speak on the topic then? Why?
Yeah.
Why
Whatever.
even speak on the topic, you know?
Look, at the end of the day, I hold a shit ton of XRP and I'm still long-term bullish on it. But what I will be doing with my XRP is not what I had previously thought, as Ripple's whole entire approach to cross-border payments and that whole entire thing has completely changed. And their focus has shifted now towards institutional DeFi, right? Being able to put your digital assets, particularly XRP and RLUSD, to work to earn passive income. And that is exactly what I'll be doing with my XRP for years to come, regardless of what happens to the price. I'll be earning yield on my XRP if it stays at $1 for forever, or if it goes to $1,000, I'll still be earning yield on it. I'll be lending it out, borrowing against it, probably buying real estate, tokenizing that real estate, renting out that real estate, paying off. Like, there's so many passive income opportunities that you can partake in just by utilizing digital assets like XRP, and that are going to continue to mature in the future. And if you're focused on price appreciation, you're missing the whole entire concept of infinite banking and, you know, literally just becoming your own bank, right? Using decentralized finance to your own personal benefit. So, yeah, I've never been a part of the whole entire crowd. You actually could never. I've been making XRP content since 2016. You cannot find one single video or post that I've ever made on telling somebody that XRP's price is going to go to $1,000, because I believe it's going to go to a high number. But yeah, $1,000 XRP, in my personal opinion. If it happens, great. I'll be a multi-billionaire if it did.
Yeah.
But I highly doubt it.
Yeah. A lot of us will. Shit. Shit.
You know, I mean, I literally almost be able to buy Twitter if XRP went to $1,000.
Yeah.
You know, so, and if that happens and I can buy fucking Twitter, then I'm buying Twitter and then deleting it.
Yeah.
You
Fact.
know? So, and if I can't buy Twitter, then I know a couple of homies that have a fat bag of XRP that would help me get the funds to buy Twitter.
Yeah.
We come together and then delete the whole fucking thing.
Yeah, I'll put up my XRP to do that for sure, bro. Kidding me? It's running, bro.
It's crazy when you think about it like that, right? All right. Anyways, moving on. That was just, I mean, I always like to hear what David Schwartz says. I feel like being part of the XRP community, you'd think that what David Schwartz says would be relatively important, but actually people pay less attention to what David Schwartz says than some random person. I'll give a perfect example. Back in 2024, when me and Aqua had noticed that at XRP Las Vegas, David Schwartz mentioned, before the AMM feature had launched and before you could actually earn yield on XRP, David Schwartz had mentioned to the entire audience, hey, look, you guys in the near future are going to be able to earn yield on your XRP. Me and Aqua were the only ones like, did y'all hear that? Did y'all hear what David Schwartz just said? And it's like that went over everybody's head. And now fast forward to today, we're seeing yield opportunities, the AMM feature, XLS 66 go live, lending, borrowing, all on XRPL. And again, David Schwartz talked about that freaking years ago. But everybody just they don't listen to him for some odd reason. It's kind of weird how that works.
Well, unless he's saying 589, you know, they don't really care what he has to say, I feel like, bro.
Yeah. Anyways, all right, so let's move on with the presentation. So I said here in this post, 2026 is showing you something that most people are still ignoring. Gold this year printed new all-time highs. The S&P 500 and NASDAQ are pushing to record levels. I believe today they both reached new all-time highs. Real estate, both in the US and globally, is sitting at its highest valuation in history. That's not random. That is capital positioning. Now zoom out. Over the next few years, every one of these markets is moving on-chain. Tokenization isn't a theory anymore. It's the direction that institutions are building towards. And while all of this is happening, crypto is still being treated like it's early. It's still misunderstood and it's still discounted. That's where the opportunity sits. Institutions are already understanding the shift. They're not just guessing, they are waiting on regulatory clarity, waiting on sound infrastructure, and waiting on the green light to scale. Because once regulation catches up, capital is not just going to trickle in, it is going to flood in. The same way that capital chased equities, chased gold and real estate to new highs, it will rotate into the next system. The question isn't if this transition is going to happen. It's whether you positioned before it became obvious. Take a second and listen to this Merge San Paulo event that took place. We have institutional participants sitting on stage talking about this adoption curve that we're currently in.
Tapping a little bit on your prior question, because it gives me the entry to this one. I believe that adoption, we're going to stop talking about adoption when it's no longer an issue, when it's already adopted in a way, right? What Eric was just explaining. And that's part of what we're already seeing. When we help either a bank or a financial institution or a traditional business enter into the space, we shifted, at least this is our approach in Poison, we shifted tech explaining to use case or solution. Like, what pain are we solving? And what are we using the technology for? A couple of years ago, we had to dedicate a lot of time and effort to explain the technology fundamentals. Why is it safe? Why you're not entering into unnecessary risks? Why it's better than the traditional or the incumbent alternative? Now that's already a given. And I think that we have you guys to thank for that, because the moment that institutional players tap into the market, there's like a validation mantra that becomes over the tech, and you start discussing, okay, now what do we solve with this? And I believe that's the right approach, by the way. You should lead the conversations with your customers or with your partners to, hey, how do we make this easier for your end users or for yourself?
I mean, if I take what Eric mentioned and now Leo as well, and I look at the setup with which these things are achieved, you start seeing some very specific trends in the US, in Europe, and also I think Latin America after having spent some time here. Generally speaking, the rails today through which crypto is accessed are pure execution. And one of the reasons is reputational. A lot of these players we're discussing that are coming into the space, they're not showcasing crypto and flaunting crypto the way they have other products that they've already been more familiar with for many years. If you look at the number of banks which are offering advisory or discretionary mandates with crypto in them, there's not many. They probably fit in one hand in Europe. And I would say a hand with few fingers too. So I think there's going to be a cultural transition, which is going to go from execution only to more advisory discretionary, which then increases the amount of education that is effectively done. Now, today, the banking space, almost always in a closed loop environment. It's buy, sell, hold. Get familiar with crypto without overcomplicating compliance topics, travel rule topics. Now the regulation comes in and starts forcing also more open loops, at least in European Union, when it comes to moving assets out. Another thing that's worth keeping in mind, and this is one of the conversations we have, how is the trading actually achieved? Brazil, as an early adopter, and some of the banks here are incredibly advanced in insourcing the flows and offering it as a principal. So you start seeing crypto on the balance sheet of some of these banks, as opposed to most European banks, which are a little bit more conservative. They act as an agent and they will rely on a broker or on an exchange providing that liquidity behind the scenes. So I think there's all these different approaches. There's some clear setups, which are, I think, very relevant today, with also their advantages and disadvantages. And more and more, you're going to see different models around the globe kind of converging in a way that ultimately will be best off for the end customer as well.
All right. So in a nutshell, he's just going on to talk about how all these financial institutions have flooded into these traditional asset classes and how over time you're going to start to see these traditional players start to actually incorporate crypto on their balance sheet. He mentioned European financial institutions. You could count on one hand how many of them have actual crypto embedded into their infrastructure behind the scenes, right? So that just goes to show how early we are in this space. This post comes directly from Monica Long, where she said, within our business, we saw dozens of requests for proposals coming in from banks, especially in the US for custody products. And that's a pretty good sign that institutions are coming.
And we can use these technologies in ways. The US is a night and day shift in terms of regulatory clarity, and thus night and day shift in terms of institutional appetite to adopt these technologies. I would say kind of like the bright line last year was the Genius Act. So this is the first time the US created legislation that provided clarity around at least stablecoins, now working on the Clarity Act this year. But that was really important for validation of the technology and the whole industry for traditional finance to be able to say, okay, this is here to stay, and we can use these technologies in a way that is approved by our regulators, and they have that clearance. It's like a green light. It was really, really important. And I mean, I could say at a macro level, I know things like B2B stablecoin payment volume more than doubled last year from 2024 to 25, as well as assets under custody by institutions, digital assets under custody by institutions. And within our business, I could say that we saw like dozens of requests for proposals coming in from banks, especially in the US, for our custody products. I think that's a pretty good sign that, the institutions are coming.
Okay.
That ain't the first time I've heard her say institutions are coming. I'll tell you that.
She didn't say they're here. She said they're coming.
Yeah.
Right? So very interesting to pay attention to. I want to come over here to this post that I had put out from XRPL Commons. And let me see why it's not sharing screen real quick. Okay, here we go. So this post right here from XRPL Commons, and it goes on to mention, well, first I'll read my post. I said, more confirmation. The focus has expanded well beyond payments into native DeFi, built with institutional grade security. And I said, having the ability to put idle capital to work in XRP is one of the biggest and most comprehensive features since the inception of XRPL itself. And here, this is directly from XRPL Commons, and it says, in this fireside chat on the XRPL product roadmap with Odelia Tortman, Director of Corporate Adoption, and Marcus Infinger, they detailed how the protocol is technically preparing for this institutional influx. The focus has expanded well beyond payments. I want you guys to think about this because of the narrative that existed on XRP prior to all the things that are happening right now in regards to DeFi. The focus has expanded well beyond payments into a native DeFi stack built with institutional grade security. Then it mentions all of the XLS65, XLS66, the lending protocol, and a multi-purpose token, or MPT. And then here, I went on to repost this on top of the comment from the gentleman, Io Akinya. I'm probably butchering his name, but he's the head of engineering at RippleX. And he mentioned that payments was never the full story for the XRPL.
To place their bet was the actual IO. Ripple has been making a deliberate shift in how it positions XRPL, less as a payments network, more as a platform for institutional finance, namely tokenized assets, on-chain credit markets, compliance infrastructure. From where you sit, what's driving the shift? And for a financial institution or a builder evaluating where to place their bet, what's the actual case for XRPL over the alternatives?
Great question. So one of the lessons that we've learned working with institutions is that they don't adopt new technology for the sake of adopting it, right? They adopt technology that fits what they're already operating with or operating as. And for us, payments was never the full story for the XRPL. And as we've deepened our payments fits what they're already operating with or operating as. And for us, payments was never the full story for the XRPL. And as we've deepened our relationship with financial institutions, we've learned that the real opportunity is actually more towards the ability for us to enable this notion of a full life cycle of capital and moving money.
So he literally just said, as we have been partnering with financial institutions, what we've realized is that the real opportunity is for us to provide this full life cycle of capital, right? That means lending, borrowing, posting digital assets as collateral. They literally just mentioned that Ripple has shifted their focus from cross-border payments and remittances to DeFi. And he said specifically, this is not coming from me. This is not some made-up influencer jargon. This is the guy that works at Ripple, just said that payments was never the full vision for the XRPL.
He said that pretty loud and clear.
You got Marcus Infinger over here. And at the same event, he goes on to talk about how this XLS66 lending and borrowing capabilities of the XRPL has been the most comprehensive and complex thing that Ripple has done since XRPL's inception.
Like glue on this network and across networks.
So what we're seeing is an amendment that would allow protocol level lending. And I know there's a lot of excitement building around that. More broadly, what do you think that means more generally for DeFi and for the XRP ledger?
Yeah, I think it means a very big deal. And there's two sides to the story here. One is this was probably the most complex feature that Ripple has released over the course of the last 13 years. Probably the more complex one was the XRP ledger itself in 2012. So from a code base, complexity and whatnot, it's been really very much a big deal. And on the other.
So myself and Aqua have been constantly telling people that one of the reasons why Ethereum sits in the number 2 spot is because of its DeFi primitives, because of how much capital that is not just sitting idle, holding and hodling Ethereum, it's instead being put to work, which creates a native demand for Ethereum token, no matter bull or bear market cycle, right? And we are entering into a phase where we as XRP holders need to shift out of this mindset, regardless of your personal beliefs in conspiracies or what are those people called, Aqua, on the internet that do like the riddlers, right? You have David Schwartz himself in a podcast just the other day saying none of that stuff is true. And then you have Ripple representatives saying that they're shifting their focus from cross-border payments of remittances to DeFi capabilities. And you have Marcus Infinger himself saying that the most complex thing that Ripple has ever achieved in the 13 years of their existence is the lending protocol. Come on now, y'all.
Yeah, bro. Gotta pay attention. Gotta pay attention.
That leads me over here to an announcement from Soil, which is the first and I believe only fully regulated DeFi protocol on the XRPL, because they just posted this, which gives me high hopes that we are about to see some of the highest regulated XRP yield available to retail investors. They posted this. It says, screenshot the moment, post in the comments, and guess how high will the XRP yield on Soil be? Now, this number goes all the way up to a staggering 6.1, which will be phenomenal if we could earn 6.1% yield on our XRP. And then there is a low count of about 1.8%, which is still higher than most vaults and other lending protocols right now that offer yield on XRP. So that's still something better than nothing, but it would be phenomenal if we could see this 6.1%. Even if we could see this 5.8% would be nice.
I feel like anything north of the 3, I mean, I'll take the 1.5 too, but anything north of the 3 is solid.
And so that leads me over here to this presentation from XRP Tokyo 2026. This is the chief operating officer at Evernorth. And I have a couple of video clips to play. Aqua, I love your perspective in between some of the things that she says. But the first video clip is just from the very beginning where she introduces herself, Evernorth, and how she mentions that the best tech will not win and that there's institutional demand for XRP.
お待たせいたしました。続きまして、キーノートスピーチをお送りいたします。Now, let's move on to the next keynote speech. Evernorth Nakamura from
Hello, everyone. Thank you so much for having me. It's a pleasure to be in Tokyo, especially during Sakura season. So nice. My name is Meg Nakamura. I am the COO of Evernorth. Before Evernorth, I spent 20 years in fintech, and the last 10 building payments, software, and infrastructure in partnership with Visa and MasterCard. The hard lesson that I learned in those 10 years is that better technology alone doesn't always win.
Simple. I only pay $10 a month for my internet connection. Fast, unlimited, anywhere.
Have you heard about Ryoko?
Many of us in this room have lived through moments where technology has transformed the way in which systems run and markets operate. Think about the iPhone, the internet before that. I feel we're in a very special moment right now with blockchain. Today, my message to you is this. For markets to transform, you need 3 things. Number 1, technology. Number 2, regulation. And number 3, capital. When capital commits. This is a photo of Times Square in New York in October when we announced our plans to go public. We raised $1 billion and showed the world that institutional capital is ready for XRP. We're all excited about XRP because it's increasing in utility. Up until now, it's been focused on cross-border payments. Recently, with XLS 66, XRP is expanding into lending. It's expanding into RWA, real-world asset tokenization, and on-chain treasury management. As utility grows, activity grows, this chart will continue to go up and to the right.
Right. So that's coming from the biggest treasury company of XRP right now. And she just said that the focus has shifted from cross-border payments to now these new lending primitives, tokenization of real-world assets. So that's not only coming from Ripple representatives, David Schwartz, but now also coming from the COO of Evernorth, which is the biggest treasury company for XRP.
Yeah. I remember reading about, it was either XLS 66 or one of those XLS, whatever, one of those ones that's built into the XRPL. And I remember being fascinated with what I was reading, although I didn't really understand it, I feel like entirely, because it's just like I didn't build the tech, right? And we're still learning every day. But there's like some feature inside the XL66 or one of those XLSs that basically help eliminate impermanent loss. And I was like, damn, I wonder if this is the only chain that has such a thing, or if there's any other chains that have something similar. But the fact that they are, moving towards DeFi, it makes 100% sense, to be real.
I want to read these little slides because this literally looks like some shit that we would post inside the Wealth 28 Club. It says, Evernorth accelerates XRP's institutional adoption, and it mentions that these institutions deploy capital into liquidity on-chain markets and yield strategies. Institutions are entering as XRP expands beyond payments, public company framework, audited governance, and risk management, and liquidity markets scale to absorb volatility and tighten spreads. Listen to what she says here. And then it says that they participate in yield generating strategies. And then here you see it says leveraged loops, where you're going to be able to borrow stablecoins as collateral and redeploy them into the same strategy to boost yielding opportunities. Right? And these are strategies that we've gone over in detail in the Wealth 28 Club for the past 2 years, teaching our members how to participate in these looping strategies, how to boost a DeFi yield by lending and borrowing. And all of this is about to come to the XRP community. So you have this certain group of people that are still living in the past mentally because they're not focused on what people from Ripple are actually talking about. And they're still so focused heavily on the speculative hype cycle that existed in previous years, when in reality, now we're about to enter into this real utility phase. DeFi primitives and DeFi capabilities are some of those real utility, primitives that are going to exist and do now exist on the XRPL. And if you don't know how to participate in them, right, then there is the possibility that you risk falling behind. You risk falling into this category of somebody who's just sitting there with idle capital, doing nothing, collecting dust, instead of somebody who's becoming an active participant, earning and putting their capital to work, yielding, looping, growing their wealth consistently without waiting for some market cycle or some speculative theory to come into fruition. Now it's about active participation. It's about risk management, risk mitigation, making sure that you're constantly earning on your wealth and growing over time, right? So I thought that was interesting. Let's just hear what she has to say right here.
At Evernorth, we think of ourselves as the bridge between traditional finance and DeFi. The future is DeFi. The future is vaults. Vaults are helping DeFi scale. Vaults can be tailored to different yield, risk, and capital objectives.
The police officer.
So anyway, she said vaults are helping DeFi scale. And if we come over here to Firelight, now I personally am not too fond of Firelight and what Flare is doing as of right now because of some of the recent developments and things that have been happening behind the scenes and just how long they've been taking with certain things. But nonetheless, it's still great to see movement. It's still great to see consistency on their behalf. I'm just personally staying away from it for now. But it does here say Firelight and Centaura just launched cover for DeFi vaults. Firelight Protocol is proud to announce, and this is from, when was this announced? Just yesterday or today, I believe. Yesterday, April 23rd. Firelight Protocol is proud to announce its integration with Centaura, the leading institutional DeFi risk curator, to provide native DeFi cover for Centaura's public and private vaults. The Firelight integration will be introduced into the Centaura suite of products within this quarter and will establish a new security standard for institutional capital on-chain by embedding a dedicated protection layer into the world's largest curated vault ecosystem. Centaura currently operates high-scale DeFi strategies integrated with enterprise-grade platforms such as Kraken and Fireblocks. As institutional participation in DeFi continues to accelerate, the demand for robust capital-backed protection has transitioned from a luxury to a mechanical necessity. While sophisticated risk models exist, persistent threats of exploits remain a primary roadblock to large-scale adoption. By integrating Firelight's native cover directly into Centaura's infrastructure, we are addressing this critical structural gap. So it'll be interesting to see how this evolves, but I found it interesting that the lady from Evernorth mentioned that vaults are going to scale XRP DeFi, and we're seeing those announcements made as of today. We also saw Upshift, whom we know if you go over to Upshift, you go over to their protocol. This is what I was talking about, how it's really exciting to see Soil possibly offering something higher than 1.8% yield, because these vaults over on Upshift, which is a regulated platform that offers vault strategies on multiple different blockchains, does offer XRP yield, but it's only sitting at a 0.66, which is kind of not worth the risk, in my opinion.
Nah. Didn't Upshift have a recent attack as well, or am I tripping?
I don't think that they themselves were attacked, but they were exposed via some of the capital that they had deployed on another protocol via one of the exploits that has recently taken place in DeFi. I don't know the full details of that, but no, Upshift themselves was not exploited. But I believe some of the capital that they had deployed on other protocols was affected.
Yeah.
Yeah. But they just announced this because, I mean, you know, and this just still shows massive ongoing transformation of the space and huge institutional announcements. Yesterday, they announced a partnership with Securitize Fund Services. And it says this marks the first time institutional reporting standards and third-party NAV performance allocation tracking have been applied to on-chain vaults. The block covered this in a post. I'm not going to read thoroughly through it, but again, it's just great to see more developments ongoing in regards to vaults and DeFi primitives on, you know, or at least available for everyday users that hold digital assets like XRP as this space continues to mature. That's all that I really had in terms of the vaults and the XRP yield today. Our favorite freaking, you know, institutional investor here, Sandy Call, put this out just a day ago, which I thought was pretty bullish. If you guys haven't been paying attention to this kind of more traditional route to invest in, you know, this new tokenization era, and this is directly from Sandy Call. Intraday yield on Benji technology platform, and how this means that an investor can own a tokenized security for part of the day, instantly transfer it to another investor, and still earn proportional yield for the period that they were a shareholder down to the second, which is insane.
That is pretty insane. Down to the second.
I mean, bro, if you put, you know, if you're a high net worth individual and you put a couple $1 million into this type of strategy, you know, you can earn yield down to the second on your couple $1 million.
Yeah. Every second counts too. Sure. When you're operating in that big amount, you know.
I wanted to listen to this guy here real fast. There was something that he said on a Key Rock podcast. This guy right here, his name is Dean Kahn. He is the head of growth at rwa.xyz. Before we get into that, what he talks about goes hand in hand with what these dudes on stage say. And this guy is the head of Valor DeFi Technologies, chief growth officer, and the CEO and co-founder of Chain Analysis. And you also have Banco Santander sitting on stage and the Bullish Exchange vice president. And this guy specifically says, look at the largest asset managers in the world. You look at the largest payment companies in the world, and you look at the largest banks in the world, and all of them have said very clearly that the future exists on blockchain rails. And then what I want to play this video clip for of this guy, Dean, because he specifically says, once I play the clip, that he has had conversations with financial institutions and giant conglomerates that have huge balance sheets where they've literally laughed at the size of this space, which is a mere few billions in DeFi, right? It's a couple hundred bill. What is it, like 160 billion or something like that right now, maybe even less?
Yeah, roughly, give or take. Yeah.
And he specifically goes on to say that these conglomerates that he has phone calls with laugh at the DeFi ecosystem because their assets under management in one asset class that they invest in is the same size of the entire DeFi landscape. Yeah, so we'll play these clips real fast. Let's listen to this guy first.
A softening of the line between crypto and traditional finance. More and more, we're seeing institutions have an increased appetite for access to digital assets that are wrapped in traditional wrappers. And we find consumers too are far more comfortable with exposure to digital assets. So I think it's very bullish for the industry as a whole in terms of increased adoption of digital assets and crypto in portfolios. They're viewed as safe. Banks like them, investors like them. We have Chainalysis that provides good support for all of these assets. Quite positive.
Yeah, I think that from the Chainalysis perspective, we've always worked with government agencies, financial institutions, fintech companies across the world to ensure that people can make safe transactions on chain. And I think that what we have seen over the last 18 months is that the regulatory clarity that has come out of the US has meant that people can make bigger strategic moves. And if you look at also the M&A activity that's happened over the past 12 months, and you look at MasterCard's announcement this week to buy BVNK, there is serious enterprise adoption of blockchain rails, and that's something that we couldn't have seen really happen before the regulatory clarity, as Cody mentioned. And I think that if you look at sort of where we're at today as an industry, is that still institutional adoption is about laying foundational work to be able to realize the potential of the technology. But if you look at the largest asset managers in the world, you look at the largest payment companies in the world, you look at the largest banks in the world, all of them have said very clearly that the future exists on blockchain. The future exists with tokenization of real world assets. And, I think that it's still very much at the beginning stages of, seeing exactly how the sequencing of that market happens, exactly where in the world adoption happens first. And, I think that that's what is exciting about being here in Brazil and hearing about those local use cases.
You're muted, bro. We can't hear you.
Thank you. I was just saying, so that leads me over here to this guy, Dean, considering that he said enterprise adoption is just now starting to scale, right? We're starting to see all these financial institutions, these conglomerates, these asset managers really start to pick up pace. And then this guy's going to put it into perspective how just like small this asset class really is right now compared to these institutions that they're talking to. So listen to this first clip. First, let's just listen to who Dean is so you guys know he's not just some random dude, right? We want to listen to people that actually have valid credentials. So listen to him introduce himself real quick.
Cheers for having me, Ben. Excited for this one. So I'm head of growth at RWA.xyz, so leading partnerships and marketing. And for anyone who doesn't know us, you can think of us like Bloomberg for digital assets. So we track kind of all real world assets across major asset classes, and Midas are a close platform partner as well. And we're kind of the source of truth for tokenized assets. So cover anything from on-chain data to off-chain data, legal and regulatory structure, who service providers are, really enabling kind of discovery of all assets in the space.
He said, think of us like the Bloomberg for digital assets, right? So he's not just some random dude. Okay. And then listen to what he says about how these, enterprises and these institutions that he talks to, they have deals going on that are the same exact size as the entire DeFi ecosystem.
And then alternative investment is going to be a much lower percentage. Dean, why don't we kick off with you? It'd be great to get your thoughts here. What do you think is the bottleneck that's kind of been holding back RWAs and why we only have 1% penetration so far? Is it regulation? Is it liquidity? Or is it the fact that institutions just don't trust the infrastructure yet?
Yeah, I think, like you said, there's no real lack of issuance. I think the supply side of tokenization is largely solved. Issuers see the benefit of tokenizing their assets. I think the bottleneck, it's a combination of a few variables, which is holding back the demand side. And just to make this easy, supply side is issuers and demand side is capital allocators, or at least that's what I'll say for the rest of the conversation. So in terms of bottlenecks, yeah, there's regulatory uncertainty, there's lack of liquidity in secondary markets, there's the macro environment right now with slightly higher rates in America, which can make sudden on-chain products less attractive. And then it's also kind of hard to discover and compare these assets. So there's quite a few factors at play. But if I were to sum it up into one core issue, I think it's that huge capital allocators and big banks are concerned with the reputational risk. So we speak to these allocators every day, like the Fidelities and the JP Morgans and the BlackRocks, and they're worried that if they allocate large amounts of capital on chain and that goes wrong, that could act as a bit of a punch in the face to their brand value. So for some of these guys, I think the risk to reward in the space just doesn't make sense. And then as a secondary factor, I was talking to a capital markets MD at a major bank yesterday, and I think distributed asset value is around $29 billion or $30 billion, and he was saying how any one of his given deals could be in that range. So one singular deal they do is the size of the whole space, which just shows kind of how small it is in the grand scheme. And obviously these banks want to be confident that, you know, if they undergo a major deal or put a large position on.
So the reason why I wanted to play that clip is because that just goes to show the level of opportunity that still exists today. That he just said, like, think about that. One bank that he's talking to in one of their deals is the entire size of what's on chain right now.
That's why I feel like there's so much about to come to chain, because this is not the only person that we've heard say what's coming to chain, right? And that just tells me that, like, yo, the 50 trillion, 400 trillion, that shit is possible. I don't know the timeline on it, but when you got people like this talking like that, man, trillions of dollars are going to be coming to crypto. It's just a matter of time.
I couldn't agree more. I think that when this space really kicks off, that notion of what we've been saying, that once we surpass, you know, let's just say the last market cap all-time high, when we surpass that, you're never going to get the opportunity to say that you bought crypto below 2 trillion or below 3 trillion market cap ever again. Like
never again, bro. Never again.
So the opportunities now that exist are exponential. I'll play this last clip from this guy, Dennis, who goes on to kind of just repeat the rhetoric. And he mentions that, you know, these asset managers are bigger than all of crypto via what they hold on their balance sheet. So just listen to what he says here.
On some kind of integration with traditional exchanges like the New York Stock Exchange or CME that could maybe mitigate some of those reputational risks? Or do you think that on-chain native markets can actually just scale?
Obviously, it's an unpopular opinion in the industry, also being a huge proponent of tokenization and on-chain financial markets. But the realistic answer, when I really look at this with a sober perspective, is yes, we do require integrations with traditional venues. Even if a lot of people in crypto don't like to believe that, when we look at the crypto financial markets, we actually see the same. So when you really look under the hood, 60-70% of trading volumes is happening on Binance. Binance is not a decentralized technology tool. So most crypto assets actually settle on centralized assets. I think in aggregate, and of course, Hyperliquid is growing very well, and it's a very interesting, promising, and exciting trend. But even when you look at all trading activities across all crypto assets, less than 10% of it really happens on chain, and this is really an optimistic scenario. So even within the crypto space, venues where latency and convenience and other considerations cross margin matter, we rely on traditional trading exchanges. Now, when you look at this in a traditional sense, in the traditional financial worlds, between New York Stock Exchange and Nasdaq, you have sizable volumes. So if you really look to scale this industry to the billions, U.S. equity markets alone are something like $60 trillion asset class. I mean, that's really the market cap of assets currently traded on Nasdaq and New York Stock Exchange. So when you look at this, it's really a promising potential when you listen to the statements of the new SEC chair saying that he believes that all trading activity within for US equities will move on-chain within the next year. So that's quite an exciting prospect, to be honest, and really a huge game changer.
So we just mentioned $60 trillion, and then he talked about how the SEC chair expects all of traditional finance trading, $60 trillion, to come on chain. Like, these numbers, when they come, it's going to be very, very interesting to see how many people in the form of retail traders were able to hold to these trials and tribulations and really lock in and focus on the projects that were partnering, developing, focus on having regulatory compliance baked into the protocol layer, having privacy baked in, having all these features that institutions actually care about and can utilize at scale, instead of focusing on, the hype that crypto sometimes delivers or under delivers, therefore. Now, because they specifically have highlighted enterprise adoption at scale, I want to just take your attention over to some recent announcements in regards to Canton, and then also just drop some gems in this document that Standard Chartered and Zodia Markets just recently put out, titled Beyond Concentration, where non-USD stablecoins can scale. And it just reiterates what these gentlemen are saying and what the guy before said. It says digital assets are entering into a new phase of development, one defined not by experimentation, but by integration into core financial systems, right? In a scaling ecosystem, even modest diversification could translate into meaningful absolute impact, making relative positioning an important strategic consideration. This report is designed to support that journey, not as a prediction, but as a structured lens to inform decisions in a rapidly evolving financial landscape. So I don't know if I'm reading that incorrect, but to me, this literally sounds like it's coming from a bank, and they're telling you that this is going to have an absolute impact, and that is an important consideration for someone, or anybody reading this for that matter, to diversify to some extent into this new and evolving asset class, as we are entering into a new phase of digital assets where they're being integrated into core financial systems, right? So I thought that was very interesting. And then if we come over to some recent announcements in regards to Canton just recently partnered with some huge financial conglomerates out of Japan: Nomura Holdings, Mizuho Financial Group, Japan Securities Clearing Corporation, and Hanwha Investment and Securities. Not small players. They're all huge financial conglomerates out of Japan and out of, I believe, South Korea, if I'm not mistaken. And none of these are experiments, right? It's all real time. It's happening. And the partnerships were announced this past week. And that just goes aligned with some other major announcements in regards to Canton. So I'll finish off my presentation with that today. We had this in recent days, over the past couple of trading days in April. We had Northern Trust make this huge announcement. Northern Trust to build tokenized asset custody capabilities on the Canton network. Northern Trust, a major, institutional conglomerate. As part of this agreement, Northern Trust will integrate with Canton Network's infrastructure to develop and deploy applications that bridge digital traditional markets, supporting institutional-grade custody and asset servicing workflows for network participants. This move also creates opportunities with other regulated partners and financial service utilities that provide services for digitally issued assets. Northern Trust will utilize its digital asset platform to support custody and asset servicing for tokenized assets issued or transacted on the network. As institutional adoption of digital assets progresses, clients are looking for custody and servicing models that align with established market standards and regulatory expectations, said Guy Gibson, co-president, asset servicing and head of institutional banking and markets at Northern Trust. Connecting to Canton Network allows us to extend our asset servicing role into new market structures while maintaining the same principles of scale, control, and risk management that clients expect from Northern Trust. Our platform is designed to integrate with our core asset servicing infrastructure to support digital and traditional assets side by side. So the reason why I highlighted this and why I'm reading this to you guys is because this goes hand in hand with the document from Standard Charter that says we're entering into a new phase where these digital assets are being integrated into core financial systems. And this is the fundamental development that just happened in regards to Canton Network that shows that this is to be a fact. It says their platform, Northern Trust, is designed to integrate with their core asset service infrastructure to support digital and traditional assets side by side. Leveraging these capabilities and building a custody application on the Canton Network will allow us to apply our blockchain agnostic, asset agnostic approach as markets continue to evolve. So I found that one to be of interest to everybody listening in, not financial advice. Then today, Bitwave completed their payment integration. I repeat, another integration into core financial services, payment integration with Canton Network, enabling enterprises to execute payments directly against invoices through programmable on-chain workflows. Instead of treating invoice payments and settlement as separate systems, Bitwave Payments now links them into a single transaction layer where each payment is cryptographically tied to its originating obligation to be automated, financed, or settled in real time. Enterprise and institutional financial teams using Bitwave can now automate accounts payable, maintaining verifiable privacy, enabled audit trail options such as on-chain invoicing and enterprise-grade infrastructure on the Canton blockchain. Bitwave, utilizing the privacy feature of the Canton Network, addresses this problem with their Canton integration. Bitwave Payments unifies invoices, payments, and settlements into one fully auditable system, all encoded with smart contracts. So this is just another example hinting at what this guy said at the very beginning, that all these asset managers, all these large institutions, all these banks, they understand clearly that the future is going to exist on blockchain. We know now how small this space really is compared to the people that are actually interested in this digital asset ecosystem. And we're seeing reports talking about how digital assets are being integrated into core financial systems. And this is now the second piece directly from and involving Canton Network that showed that this is happening in real time, right? Core financial integration with digital asset infrastructure. Last but not least, we had this announced April 22nd, so just 2 days ago. Temple's Lightspeed, a new era for trading on Canton. Lightspeed is a complete reconceptualization, that is a huge word, I nailed that one, of private market infrastructure on Canton. With Lightspeed, Temple offers a wide range of usability, speed, and performance improvements to scale institutional markets on distributed networks. After 6 months of extensive R&D, Temple is able to support sub-10 millisecond matching and faster order processing while maintaining full composability with assets and applications on Canton. Lightspeed architecture horizontally scales and can process over 100,000 orders per second, making Temple the fastest native trading system that leverages the global synchronizer. So, yet again, another traditional finance announcement where these traditional financial players are going to be able to trade digital assets and run, sub-second order books on Canton Network. Yet again, just showing that Canton is at the forefront of integrating into traditional finance behind the scenes. These are some announcements that go otherwise unnoticed. But outside of that, that's really all that I had for you guys today. If Aqua's still around, I'll let him have the floor. And if not, then blessings to you guys. That is all that I had. None of this is financial advice. Make sure that you guys are always out there doing your own personal research. No hopium, no hype here at CyberX. Just delivering you guys real insights when they matter most. Stay focused out there. It looks like Aqua's away from his computer right now. So with that being said, many blessings to you guys. Everybody enjoy your Friday. Be cognizant out there. Be aware. And we'll see you guys next Friday on the podcast. Everybody take it easy. Or are you still there, Aqua?
I'm here. My daughter's sitting on my lap. She's wilding out right now. So I didn't want to have her on the camera with everybody.
Yeah, bro. That's all that I had today. Great stuff.
Yeah. Nah. These types of lives just make me more and more bullish on what's really coming, So I'm excited, bro. I'm super excited for what's to come.
100%. Everybody, guys and gals, take it easy. Many blessings. We'll see you guys next week.
Peace out, everybody.